Welcome back to Bunnex Investment Group. So if you follow all the steps that I'm going to review, you are definitely going to see some results. So make sure you stick up to the end of this video to fully comprehend. But before we do so, you can check out our free Telegram channel. I'll leave the link in the description box below. So the first thing is actually to locate peaks. I'm going to give you actionable steps that you can follow straight away without any difficulties. The first thing is actually to get what we call a peak formation high, a peak formation low, or a reset peak. A peak formation high is basically a point where we expect to see the market reverse after 3 levels of rise or 3 levels of drop. Like in this case, we can see that we had 3 levels to the upside or 3 days of rise to the upside. First impulse to the upside, then we had the next impulse to the upside, and then lastly we had the last day of rise up to this point. Therefore, we can say this point is actually a peak formation high. So we are saying the first step is to locate these kind of peaks as peak formation highs, or you can actually locate these kind of peaks as peak formation lows. These are actually reset peaks. So still on that note, we are saying there are 3 types of peaks: peak formation highs, peak formation lows, and reset peaks. So either one of them is actually valid to first locate before you do anything within this particular strategy. Then the next step is now to see the level 1 flow for us to get an evidence that the market is now pulling away from that peak formation low or peak formation high. And after getting that evidence, we now start to look for entries. So in this particular case, this is Euro JPY, which actually occurred last week. And going on the M15 time frame, which is actually easier to see, we can see that we had a peak formation at this point, which was a peak reset. So this was a reset structure that was introduced or that was issued by the market makers to us in front of us. We've said that's the first thing that you need to see. Then a shift away from that peak reset, which is this particular impulse to the upside. After that, we are now looking to get a pristine entry. But a pristine entry can only come if we see a day of consolidation. So someone would ask, how do we validate a day of consolidation? Of course, if we do not have rules for that, it's going to be subjective. So a day of consolidation is whereby the opening price of a day is in or almost in the same line with the closing price of that day. In this particular case, we had this opening price of this day and this closing price of that same day. If we put a straight line, we can see that it was almost in the same line, opening and closing of that particular day. If we see something like that, it will mean that the market makers were holding one of the currency in their pairing, and they were actually accumulating contracts. So our next thing that we need to do is to actually see the low of that particular day being retested or being violated, or the high, depending on the market context. So in this particular case, we are saying we got a peak reset. A peak reset showing us that the market is now in an upward move. We had more evidence with level 1, and this level 1 was actually showing us an upward move. We had a day of consolidation. After that day of consolidation, the low of this day of consolidation was this, and the market actually chopped to come back and retest the low of yesterday. After retesting the low of yesterday, we need a candlestick reversal pattern. We may actually switch to the lower time frames to get a more pristine entry at low of yesterday. And as you can see, the market actually went right up before the week ended. Then another example can be seen on pound USD, where we also had a peak reset or a peak formation low as a reset structure. In this particular case, we had this as the peak formation low. After that, we had a rise of the price, and within that rise, it was now evidence of the market going right up. We had a day of consolidation whereby the opening and the closing price were almost at the same price. As you can see, the closing price was at this point, the opening price was at this point. Therefore, it was a valid day of consolidation. Our anticipation was now to see the market to come to yesterday's low, give us signs of rejection, and we enter without fear. In this particular case, we had the market retraced to the downside at yesterday's low. Another example was on gold, and these examples were actually from the last week, referring to the time of recording this video. In this case, we had gold, and gold was actually chopping, but within doing so, we had a point that we call a peak formation high. From that peak formation high, we were actually chopping and not completing our cycles. In chopping, we were looking to get a point where we can get an entry, and an entry at yesterday's high. We can see the opening price being this one on this particular day. It was the 25th of April, and then the closing price being this one. Therefore, we actually were anticipating to see a trade at yesterday's high. There was a shoot above, which is violation of yesterday's high, but a return back inside with a candlestick reversal pattern as a 3-candle arrangement that was confirmed, and the market went down. From this point, it actually went down. Therefore, at closure of this particular candle, that could where we made our entry. Another example was on pound odd against yen. Odd against yen made this particular point of reversal. There was several days of rise up to this zone, and within those several days of rise, there were only 5 days of normal cycling. So we say a cycle might have 3 or it might have 5 days of net rise. So from this point, we had a peak formation high. Then we had evidence of move to the downside. After that evidence of move to the downside, we actually had a day of consolidation. A day of consolidation actually came at this particular day, whereby the opening price and the closing price were almost at equal prices, and then the market actually went to retest yesterday's high on the following day, and it went right down like that. So as I've said, there are only a few actionable steps that you need to follow for you to actually book some profits from this particular trading strategy. You need to just look for a peak formation high or peak formation low after counting of levels, and then you need to see evidence of rising or drop depending on where you are coming from, and then after that you need to see a day of consolidation as defined by the factors that we've said, whereby the opening and the closing price are almost equal, and then after that we need to see retest of yesterday's high or yesterday's low depending on the market context. Get a candlestick reversal pattern, preferably on smaller time frames, probably the M5 or M1 even, if you have more time to actually observe those time frames, or even the M15 time frame, then enter without fear. So if you execute this strategy with patience and discipline, you'd see that your accuracy rate will be probably 85 plus, going right up. So as I always say, do not just jump within a strategy on your live account without backtesting and without trying it before investing a lot of money. Forex is a system designed by wise people or smart people to transfer wealth from the impatient to the patient. So which side are you? On that note, we come to the end of this video. I'll see you on the next one, and make some money.